Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets of corporate filings. And today we are diving deep into the latest quarterly report from Cintas, a company that keeps businesses looking sharp and safe. So buckle up because we've got some numbers to dissect and a story to tell. Cintas is known for providing uniforms and facility services to businesses across North America. And like any publicly traded company, they file regular reports to keep investors and the public informed about their financial health and operations. This particular filing of Form 10Q covers their performance up to the 30th of November 2025. Let us jump straight into the main financial numbers. Cintas reported a total revenue of $2.8 million for the 3 months ending the 30th of November 2025. This is a solid increase of nearly 9.3% compared to the same period last year when revenue was about $2,561.8 million. That means they are bringing in more money from their customers, which is usually a good sign. A huge chunk of that revenue comes from their uniform rental and facility services, about $2,155.4 million for this 3-month period. That segment grew by 8.3%. Their sales strategy clearly involves getting more business from existing clients and adding new ones. They are also doing a good job of keeping their current customers happy as their customer retention is strong. The other revenue streams, which include their first aid and safety services, also saw good growth, increasing by 12.8% to $644.6 million. This shows Cintas is not just about uniforms, they are expanding their offerings, and it is paying off. Now let us talk about cost. The cost of providing uniform rental and facility services went up by 6.6% to $1,081.2 million. However, it is important to note that this cost as a percentage of revenue actually went down from 50.9% last year to 50.2%. This year, this is fantastic news. It means they are getting more efficient in how they deliver their services, perhaps through better sourcing or by using their existing resources like uniforms and equipment more effectively. Selling and administrative expenses also increased by 10.4% to $756.8 million. This means they spent more on their sales teams and general business operations as a percentage of revenue. This crept up slightly from 26.8% to 27.0%. This is likely due to investments in their sales force to drive that revenue growth we just saw. With revenue growing faster than some costs, Cintas saw its operating income rise to $655.7 million, or 23.4% of revenue. This is a slight improvement from 23.1% last year, showing that their focus on efficiency is paying off. And what about the bottom line? Net income came in at $495.3 million, an increase of 10.4% over the prior year. Diluted earnings per share, a key metric for investors, also increased to $1.21 from $1.09. That is great for shareholders. Looking at their balance sheet as of the 30th of November, 2025, Cintas has total assets of over $10 billion. Their total liabilities are around $5.7 billion, and shareholders' equity is about $4.5 billion. Among their liabilities, accounts payable stands at $503.3 million. They also have a notable amount of debt, with $550.8 million due within 1 year. And over $2.4 billion due after 1 year. The company is actively managing its debt structure. On the shareholders' equity side, common stock and paid in capital is valued at $2.7 billion. Retained earnings, which represents accumulated profits, are a massive $12.4 billion. This is a sign of a very profitable company over time. Interestingly, they have a large negative number for treasury stock at almost $10.8 billion. This means Cintas has been buying back a lot of its own stock, which often indicates confidence from management and can boost earnings per share. Now let us glance at their cash flow. For the 6 months ended the 30th of November 2025, Cintas generated $945.7 million from its operations. This is higher than the $905.1 million from the same period last year, demonstrating their ability to convert profits into cash, which is crucial for any business. Investing activities show $309.1 million used primarily for capital expenditures like new equipment and property, as well as for business acquisitions. They also spent $93.2 million on acquiring businesses, which shows they are still looking for growth opportunities through mergers and acquisitions. Financing activities show a use of $699 million. This is mainly due to dividends paid to shareholders and significant share repurchases. They are definitely rewarding their investors. Speaking of share repurchases, Cintas has been very active. They have multiple authorized share buyback programs totaling billions of dollars. For instance, the 26th of July 2022 program alone was for $1 billion in the 3 months ending the 30th of November 2025. They repurchased over 3.2 million shares worth about $618.8 million. This is a consistent strategy to return capital to shareholders. Their proactive approach to returning capital is a core part of their financial strategy. All these numbers and actions paint a picture of a company with strong operational performance and a clear strategy to grow and reward shareholders. Overall, Cintas seems to be executing its business plan. Very effectively, revenue is growing, costs are being managed efficiently, and they are returning capital to shareholders. The company appears to be on solid ground with its diversified business model and strong market position. However, it is always wise to keep an eye on rising administrative costs and the impact of any future acquisitions. What are your thoughts on Cintas' latest financial performance? Do these numbers make you feel confident about their future direction? Share your opinions in the comments below. If you found this deep dive useful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analyses of company reports. Join our Discord community, linked in the description, to connect with other finance enthusiasts and discuss market trends. Thanks for watching, and we will see you in the next episode.